Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. In the previous video, I have discussed that Nifty is forming a top formation and we are witnessing a Wyckoff structure. Well, the structure has been negated now, and I have highlighted that 16,057 would be the key level where bulls could trigger a short covering rally, and we have seen markets above 16,057 at 16,350. And what's the structure now? That is very much important. Well, let's look at the first Nifty chart over here. So in the previous, if you have remember that we have highlighted 16,057 was a Bollinger Band highs, which are now taken out. And if you look at the Bollinger Band, the three lines going has been widening. So after a squeeze, a widening is a strong sign for the either side trend. So in this case, it's the bullish trend which is developing. Second, if you look at the gap, the red lines over here, gap is acting as a crucial support zone. So even if you look at the Wednesday session, where markets took a dip but took right support at the gap area, and we have seen end of the day markets coming back very strongly. Third, the rising trend line, the blue lines over here, again they are acting as a strong support zone. So overall, we think that now the 16,160 150 zone, adding at 16,057, which was the previous support, or probably 15,950 16,050 zone, till these levels are holding, I don't think that Nifty is set to disappoint bulls, I would say, and we might continue to hover on the positive side. Though there are some risk factors at current point of time, but if I just look at the Nifty technical structure, yes, it is forming a good, a strong base, and probably 15,950 16,057. This range will be very crucial for the momentum to continue on the bullish side. If you look at the Nifty 500, which is again the slightly broader face, and let me show the chart over here. And if you look at the Nifty 500 chart over here, again it is showing a strong bullish trend. The previous highs now, which was acting as resistance, will act as a support now. Again on Wednesday, the similar market took a down tick and in the end recovered. Look at the support zone it has taken, again the previous highs. So this is very much important. Plus, if we look at the 50 days average, which is the short to medium term average, is been holding quite strong on the daily chart of Nifty 500, which is again a strong sign of a bull. So this is very crucial. And if you look at the underperformance of if you look at the underperformance of recent times, mid cap and small cap are underperforming against the Nifty. So if you look at June and July, where Nifty was trending in a range, mid cap and small cap outperform on a larger scale. So there is a clear cut sector rotation happening. Now the large caps are taking the lead at current point of time, and it's time that these large caps wake up for a bigger rally, bigger set for momentum for taking Nifty to the higher levels. Well, there are some risks I foresee at current point of time. Looking at the structure of the broader market. First, if you look at advanced decline ratio for Nifty 50 post the breakout, I'm not looking at 1 or 2 days, but if you look at the post breakout for 4-5 trading session or probably 1 week, these advanced decline are slightly very not healthy, I would say, because if you look at on daily basis, 18-20 stocks are advancing against the 30 declines. Though if I look at the weightages of HDFC Bank, HDFC, ICICI, though they have seen been having Infosys, even TCS and Infosys, they have the larger pie of weightage on the Nifty 50. They are gaining the momentum, but if you look at the advanced decline overall, it's been slightly unhealthy, and that's the major risk I foresee. Second risk is again, even if you look at the Nifty 500 market breadth, advanced decline, on an average 330, 350, 370 stocks are declining against in the 500 stocks. So again, I would say 130, 150 stocks are advancing against 350 decline, and that's the bigger risk I think one should do. Again, I'm looking at the positive angle to this. mid caps and small caps has largely outperformed in the Nifty in June, July, and large caps are taking a strong positive movement. But at the same time, the risk is that mid caps and small caps are witnessing huge profit bookings. Again, with the new norms are there, and I don't want to get into the norms, but the profit booking has been on a larger scale in mid cap and small cap. So that's the one risk parameters I think could hamper this breakout above 16,000. Plus, if you look at the momentum of the or the size of the candles above post breakouts, I think they are not forming a strong bullish trend, being an indecisive candle, and there is a possibility that we might see a runaway gap again. Being this gap above 16,000, prices acting as support zone and followed by a gap, a runaway gap can be the possibility where it could take markets higher. But yes, I don't think there is a risk till markets are holding 15,950, 16,057 levels onto the downside. And again, upside is we have an open sky where markets can go anyway up to the positive side, but downside it seems to be a slightly limited. So signing off, Brijesh Bhatia, and I think these videos are really helping you out on the trading per se. So in case you think that it is helping you out to make profits, do click onto the like button and do comment how do you feel about our videos, and we will continue to make more videos like this. Thank you. Signing off, Brijesh Bhatia.
This is it. The only 20 stocks to own forever. Click here to reserve your free spot for our special event on Forever Stocks